Hey, good morning, everyone, and welcome to A Realtor and a Lender. And I'm going to introduce my guest, Eric Rosemary with the CrossCountry Mortgage Group. Go ahead, Eric.
How y'all doing?
Nice. My name is Lettely Foster with Compass, and we're here to answer some really great questions that everyone has had in mind. So let's start off. Eric, everyone is wondering about the Feds and the new interest rates that have been cut. How did the Feds cutting the rates impact mortgages?
Well, that's a great question, one that everybody has been asking a lot. So when the Fed cuts interest rates, it often indirectly affects mortgage rates. Although the relationship is not directly related, it does have an effect on mortgage rates. Mortgage rates are typically driven by investor expectations of inflation and economic growth. So when the Fed cuts rates, it's signaling concerns about the economy slowing down, which may cause investors to seek more secure bonds that will also drive down mortgage rates.
And how does this impact buyers?
Well, with the Fed cutting rates, that means lower mortgage rates. Hopefully, if the Fed is moving in the right direction, so that's going to go ahead and lower borrowers' mortgage payments. It's going to give them increased buying power, more favorable terms. It boosts buyer demand. It will also cause prices to rise due to buyer competition. Now, a lot more buyers are entering the market. But overall, the Fed cutting rates can create more favorable conditions for home buyers by lowering costs, but they can also increase competition by rising prices in demanding markets.
Yeah. Another thing that I'm seeing how it's impacting buyers, like you mentioned, it is helping them with increasing their buying power. And also we're starting to see an increase in buyer consultations. Buyers who were on the fence about buying for the rest of this year, after seeing the announcements about the interest rates being cut, suddenly they're calling, they're like, hey, I'm no longer on the fence. Like, put me in the game. Put me in the game.
Yep. Mortgage rates are up. Mortgage applications are up 9% this month.
Wow.
We've definitely seen an increase of people, like you said, that were standing on the sidelines waiting for rates to drop, getting back into the market, which is going to cause prices to go up as competition gets a little bit more fierce.
Yeah, so I know, like right now, we no longer have the Hometown Heroes program, but you guys offer something amazing to your buyers at all times. Like, you guys always have special products out there. Can you share like one or two of them?
Yeah, so Hometown Heroes is depleted all their funds. Today, about $2 million opened up, but that was gone within 30 minutes. But there are other
30 minutes?
Yeah, 30 minutes.
Wow.
So we'll see what happens in 2 weeks when more funds come available. But there are other programs like our Community Promise program. That's a program we do directly in-house where we'll give up to $7,500 in down payment assistance and closing cost credits. We don't recapture that. That's forgivable. There's also 100% financing FHA, and there's a few other programs in addition to, say, SHIP program that has funds available currently right now in Palm Beach County and Broward.
That's awesome. So I know that the Feds is anticipating rate cuts by the end of the year. Does this mean that buyers should wait? Should it mean that they should get in the game immediately? What exactly does it mean for mortgage rates?
Well, again, just like this past rate cut, mortgage rates might not follow the Fed cutting rates, but if they do, it can impact it indirectly. So rates can start to slide a little bit. Time in the market is tricky. You don't know if rates are going to continue to decrease over the next few months or with a Fed cut. You don't know if it's going to drive prices up more, but as buyers come into the market, it will drive prices up. So the bottom line is, should they wait or should they act? If you find, the way we think about it is, if you find a house that fits in your budget, fits your needs, it may be wise to move forward rather than waiting. You can always refinance down the line, and owing less is always better than owing more when you're refinancing.
Yeah.
So we have a program, buy now, refinance later. We've extended it, I believe, through the end of the year, which allows somebody who buys a home now, and they will be able to refinance with us at a later time, where we'll waive all our all our lender costs, our underwriting, our processing, hoping to be able to lower their rates. So.
Yeah, I think also, you mentioned a good point about the rising prices of homes. I have a feeling, of course, some sellers are probably going to try to take advantage of the market, of course, increase their sales price on their properties. But one thing that sellers have to keep in mind is overpricing is still not a thing. Regardless of how much the interest rates actually drop, it's really important to still price your property accurately. That way it can actually sell.
Yeah, correct. You only get one shot at pricing your house and being first to market. If you overprice it, people are going to skip over your property. And if you do price reductions, it's not always a good thing to do that later on down the line.
It's a little skeptical.
Yeah.
So this is probably one of my favorite services that you offer. And actually, this is how I was introduced to you. I'll tell you guys a little story about how Eric and I met. Eric and I met through a transaction where I was representing the seller and his realtor, hi Christy with Kai's, she was representing the buyer. And turned out that the HOA did not have enough reserves, and
Correct.
we thought the deal, well, I personally thought the deal was going to go south. And Christy was like, no, like my lender, he's got it, like we're going to be fine. And I was like, really? You have a lender who fixes things? Like, this is interesting, because you don't always meet lenders who know how to fix, files. Some of them just don't know what to do, and it falls flat. And Eric took up the file. Well, he was already working on it, and we definitely made it to closing. And what did you do to help save that file?
I gave her a second mortgage.
Yeah.
So she was able to put 10% down. We were able to avoid needing to verify the reserves by splitting the loan up into two loans. There are many other ways to go about this, but that was the simplest way, the most cost effective for the buyer. And she got into the property and it worked out. Yeah.
Yeah. And ever since, Eric and I have been tied like glue, and he's been fixing files ever since, because anyone who comes to me with an issue on condo reserves or anything like that, I always tell them I have just the right person. Like, he knows exactly how to put together files and how to make it to closing. So I really appreciate that about Eric.
Thank you.
He's really great at his job, and his team is as well. But one of my other favorite services that they offer is called the Rosemary Buyer Promise. Can you talk a little bit about that?
Sure. So, the market's very competitive, and a lot of times sellers are skeptical about lenders and if they're going to get the loan done, like you were. So one of the things that we put together was the Rosemary Buyer Promise, and that is my pledge to make a buyer's offer as strong as possible. Mm-hmm. By doing that, that's being available 7 days a week for pre-approval letters, payment quotes. Most importantly, have the ability to speak on the buyer's behalf to the seller, to the seller's agent, to all parties, to discuss the strengths of our borrower, to put their mind at ease. This is a big transaction. A lot of sellers have a lot of things going on where that's going to depend on their sale. They maybe have a job transfer, buying another house, and the last thing they want, like your deal, is for it to collapse because of a lender who doesn't have all the tools, or doesn't have the knowledge to get it closed. So that's one of the things that we do. We also offer a $5,000 closing guarantee that I'll close on time, or I'll pay the seller $5,000. So we make sure that we meet that closing date every single time. Now, things do come up that are out of my control, or the seller's control, or the buyer's. So people need to be understanding with that, but we'll do everything we can to get to that closing table. Yeah. We'll also strengthen the offer with a 7-day loan approval and a 7-day turnaround time on our appraisals. We pay for the rushes to get that appraisal back. We can get an appraisal done in 48 hours if need be. And we guarantee a 21-day or less closing. We've closed, I think, in as little as 15 days. 12 days before.
Like the latest.
I mean, the law is 7 days.
Yeah.
So you throw a weekend in there, you're almost at that 12-day mark. So all these things combined with our stellar reputation in the area as a top lender, we assure that buyer and sellers that we're working for them as their lender to bring them across the finish line without any surprises.
Yeah, I love that. That is absolutely my favorite service that the Rosemary Team offers. And people ask me all the time, like, how do you get all these offers? How do you beat all these multiple offers? He's my secret tool, right? This is the secret. Because without a great team, there's just no way that we can make this happen.
Yeah. Yeah, and it's just being open and honest with the seller and seller agent. We give updates to all our agents every Tuesday. What's going on with the transaction. We keep everybody up to date, and they know what's going on, so they're not feeling that they're kept in the dark. It's always a bad thing to have that feeling. I've been through closings where I was on the other end and I wanted just an update from my lender. I didn't do my own loan, and I wanted the update from my lender, and I didn't get a phone call back for days. I wanted to talk to the agent, didn't get a phone call back for days. It's just not a good feeling.
Yeah. All right, let's move on to the next question. Now, what about some strategies on securing the best interest rates?
Well, yeah, so it's always good for a buyer to come to us as early as possible. I've always said, listen, you're not going to close today. You may not close next month. You may not close next year, but it's always good for you to talk to us in the beginning so we can put you on the right path to home ownership. So I put together, a 10-step plan to securing the best rate. That's making sure you're up to date on your credit report and your credit score, making sure that you've reviewed it with a lender like me to make sure that, there aren't accounts on there that are not yours. Consider different terms. A lot of times going to a 20-year term over a 30-year will give you a much lower rate and keep your payment within $100 of that 30-year, and you're shaving 10 years off your loan. Don't buy big ticket items. Please don't go buy a car the week before you're buying a house. These are not good things. And consider all types of loans, FHA, conventional, weigh the options. Don't go to a lender who only says, I only do conventional loans or I only do FHA loans. You're not getting the best service when they do that. Go to one that has a wide variety of programs, and we do.
And let's pause right there really quick on that one, because I know that a lot of times when we are placing offers on these properties, the realtor on the other end, they're like, hey, we're not accepting FHA mortgages, and that's a problem. Tell me a little bit about why agents should be considering FHAs as much as they're considering conventional offers as well, and how compatible they both are.
Well, it's just being uneducated as to why they won't take FHA. Now, FHA and VA, government-backed loans, they are a little bit more scrutinizing on property condition. So that's one thing that really deters them from accepting an FHA offer. When it comes to condos, it's a little bit different, but for the most part, FHA loans sometimes are just as hard to qualify for as a conventional, but they do allow for expanded guidelines, higher debt-to-income ratios, lower credit scores, and things like that. So it does make it easier for a borrower to qualify on that aspect. So if something does come up throughout the process, an FHA loan may still work, whereas a conventional, you may have to restructure it because the DTI went up, the debt-to-income ratio went up, or insurance was higher, or something like that. So you have a lot more flexibility with an FHA loan. So don't be deterred by accepting an FHA offer, as long as the property condition is, meets FHA standards. And that's where I come in. I get on the phone with an agent and discuss with them the conditions and why they're against FHA. And a lot of times they tell me, well, I just don't know enough about it. And everybody tells me not to accept an FHA offer. I said, well, you're negating 50% of the buyers out there. 27% of my loans are FHA.
Yeah. That's a really big percentage.
Yeah.
And I think one of our deals that we had last month, we went through that, where the guy would not accept, the agent would not accept the FHA mortgage, and we just had to get on the phone with him. Yep. You had to explain to him why he should consider it. And
we're going to give you full price. We're going to give you this. We're going to give you that. FHA, there's nothing.
Great terms.
Yeah. And the appraisal process is pretty much the same when you're doing an FHA loan versus a conventional. Yes, they're going to look at, like I said, the condition of the property, but you're going to do that in the inspection. If there's problems, you're going to want to fix it anyways as a buyer.
Exactly.
Wood rot and fascia and roof and stuff like that.
Exactly, especially if you're a good agent and you're analyzing the appraisal report, you're analyzing the inspection report, regardless, you're going to go after those items for the sellers to repair. Yeah.
So the rest of the list is, making sure your income and you're maintaining a stable employment. If you're self-employed, talk to me. We all know how it is when you're self-employed. You want to have as much write-offs as you can, and these excessive write-offs will decrease your income. So talking to a lender before you go and file your taxes, is always wise. Considering buying down points. Sometimes it makes sense to buy down the interest rate so you don't have to refinance.
You've done that before.
Yeah, done it a lot. There's also temporary buy downs and things like that. So consider all the options. Talk to a mortgage professional early. I can't stress that enough before you buy, so that we make sure you're taking advantage of your full potential in buying. And in a buyer's market, negotiate seller credits to help maybe buy down your interest rate, and then shop your homeowner's insurance. This is not getting you the best mortgage rate, but shopping homeowner's insurance before you're making an offer is key, because insurance could be $2,000 on a house or $7,000 on the same house right next door, due to age of the roof, how it's built, whether it's wood frame or CBS, if it's a flat roof or an angled hip roof. I'm not a roofer, but all these can really significantly impact your payment. And at the end of the day, the payment is what matters, not the rate. The rate, you do not write the rate on that check you write to the bank, you write that payment. So working with a lender that has the connections with insurance agents. We work with Frank Catola at United Insurance, and he always shops for the best policies out there, just like I shop for the best loan programs out there, and you shop for the best house for the client out there.
Absolutely. And I would say, even with your last point about shopping for homeowners insurance, that's something that, we had to make changes with, even on the contract. Letting buyers, or giving buyers the opportunity to shop those insurances while we're still under our inspection period. Because guess what? If they can't get insurance on these homes, or if the insurance is astronomical and it's unaffordable, then unfortunately that payment is not going to be favorable to the buyer.
If they're tight on their debt to income ratio, insurance could really hurt their qualifying power. So what I do is, if you come to me with a property and it's questionable condition and things like that, or older, we'll call Frank and we'll get a quote from him, a preliminary quote. Now we need the wind mitigation and the 4-point inspection to finalize it, but we'll get a rough quote. He'll look at permits in county records to see if they have a new roof. We'll find out as much as we can from the listing agent to find out what the policy will generally cost. I just got a quote the other day. It was a bigger house, and the seller's agent got a quote of $30,000 for a house in East Fort Lauderdale for insurance. I called Frank, and he gave me a quote. He didn't do anything magical. He gave me a quote. It was $17,000.
Wow.
So my buyer didn't buy this property, but it was a $13,000 difference in quotes from one agent to the next.
That's insane. Do your homework.
Yeah.
Definitely got to do your homework.
Work with us. We'll get you quotes. We'll check with a couple carriers. You're free to use whoever you want, but always trust your lender and your agent, because they have those business relationships. Don't get anything out of it outside of convenience for you, and to make sure you're taken care of.
And that's why we're here for you. So thank you so much for tuning in to a realtor and a lender, and we'll see you next time. Bye.
Have a great day.